top dividend-paying growth stocks to buy. Analysts and investors anticipate a fast-paced economic recovery thanks to a federal stimulus-driven increase in consumer spending, a low interest rate environment, and the gradual but continuing resumption of industrial activity. Consequently, many investors are shifting away from stay-at-home stocks to reasonably priced stocks that are expected to do well with an economic recovery. So, stocks that hold the potential to grow in the economic recovery phase should be the ones on which growth investors bet. However, given current market volatility, it could be wise to ensure some steady dividend income to enhance the growth attributes of a stock before investing in it. Vector Group, Limited, VGR, HVT Furniture Companies, Inc., HVT, Entravision Communications Corporation, EVC, and Big 5 Sporting Goods Corporation, BGFV, are well positioned, we think, to grow their revenues and EPS with the economic recovery, and they pay decent dividends. So, betting on these stocks could help one generate solid total returns. Vector Group, Limited, VGR. VGR is involved in the manufacture and sale of cigarettes and e-cigarettes. The company has operations primarily in the United States. VGR has gained 31.6% over the past year to close yesterday's trading session at $13.67. The company recently launched New Valley Ventures, an investment vehicle that focuses on next-generation technologies. The new company will invest in prop tech startups. VGR's trailing 12-month revenue has grown 4.8% over the past 5 years. Its trailing 12-month EBITDA grew 7.2% year-over-year. VGR declared a dividend per share of 20 cents last quarter. The company has an annual dividend yield of 5.85%. The 4-year average yield of the stock is 11.4%. VGR is expected to see a revenue growth of 17.7% for the quarter ended March 31, 2021 and 3.9% in 2021. Its EPS is estimated to grow 33.3% for the quarter ended March 31, 2021 and at a rate of 6.4% per annum over the next 5 years. The ratings are also high on VGR. It has an overall rating of A, which translates to a strong buy. The ratings are calculated by considering 118 different factors with the weighting of each optimized to improve overall performance. It also has a growth rating along with momentum, value, and quality ratings of B in the A-rated tobacco industry. It is ranked number 1 of 11 stocks. HVT Furniture Companies, Inc. HVT. HVT is a specialty retailer of home furniture and accessories. The company has operations primarily in the United States. HVT has returned 185.1% over the past year to close yesterday's trading session at $36.01. The company recently opened a new store located in Southlake Corners. The store will have a dedicated space for in-store consultations. HVT declared a dividend per share of 22 cents last quarter. Its dividend payout has grown 15.6% over the past 5 years. The company has an annual dividend yield of 2.44%. The 4-year average yield of the company's stock is 5.9%. The company is expected to see 11% revenue growth for the quarter ended March 31 and 14.1% in 2021. Its EPS is estimated to grow 25.5% for the quarter ended March 31, 2021 and 13.1% per annum over the next 5 years. The company's trailing 12-month revenue has increased 1.9% over the past 10 years. HVT's trailing 12-month EBITDA has increased 9.1% over the past 10 years. It's no surprise that HVT has an overall A rating, which equates to strong buy in our rating system. HVT has an A grade for quality, growth, momentum, and value. In the A-rated home improvement and goods industry, it is ranked number 1 of 64 stocks. Entravision Communications Corporation, EVC. EVC operates in the television broadcasting and radio broadcasting segments. The company has worldwide operations. EVC's stock price has increased 101.9% over the past year and its last closing price was $4.08. EVC is expected to see a revenue growth of 97.9% for the quarter ended March 31, 2021 and 53.8% in 2021. The company's EPS is estimated to grow 566.7% in 2021. EVC's trailing 12-month revenue has expanded 6.2% over the past 5 years, while its trailing 12-month EBITDA has expanded 43.6% over the past year. The company recently launched a revamped online news destination called noticiasya.com. It has also released a new audio streaming hub called El Boton. EVC declared a dividend per share of $0.025 last quarter. The shares have an annual dividend yield of 2.45%. The 4-year average yield of the company's stock is 5.88%. EVC's strong fundamentals are reflected in its ratings. The stock has an overall A rating, which equates to strong buy in our rating system. EVC has an A grade for growth and sentiment, and B for value and quality. In the B-rated entertainment, broadcasters industry, it is ranked number 1 of 11 stocks. Big 5 Sporting Goods Corporation, BGFV. BGFV is a specialty retailer that focuses on sporting goods. The company has operations primarily in the western United States. BGFV has gained 1,050.8% over the past year to close yesterday's trading session at $14.04. BGFV declared a dividend per share of 15 cents last quarter, which is an increase of 50% versus its earlier dividend amount. The company's stock has an annual dividend yield of 4.27%. The 4-year average yield of the stock is 9.18%. BGFV is expected to see revenue growth of 19.5% for the quarter ended March 31, 2021, and its EPS is estimated to grow 400% for the same quarter. The company recently negotiated a loan from Bank of America, BAC. The 5-year loan is expected to help give the financial flexibility to the company's operations. BGFV's trailing 12-month revenue has grown 0.2% over the past 5 years, while its trailing 12-month EBITDA has grown 31.9% over the past 3 years. It's no surprise that BGFV has an overall A rating, which equates to strong buy in our rating system. BGFV has an A grade for quality, growth, momentum, and value. In the A-rated athletics and recreation industry, it is ranked number 1 of 33 stocks. Thank you for watching this video. We appreciate your continued support. For more daily news, please subscribe to our channel. This is Economics Empire, and we'll see you in the next one.